Hello everyone, Corey Mitchell here with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of August 5th. If you're in Canada, Canadian markets are closed for a holiday on August 5th, but US markets are open as per usual. Each week I go through the same process, just deciding how aggressively I'm going to be trading and in which direction. If you want some potential trading ideas, you can check out the best swing trading stocks list for August. It was just updated. It has two lists, one very strong, one very weak, looking at trades for potential longs or shorts. And before you do that, you might want to consider, we'll get to why this is the case, but market conditions are mixed. A couple indicators are hanging in the positive, but others are not so good, so I'm not too interested in accumulating much on the long side here, or the short side for that matter, keeping exposure pretty minimal. You can also check out these lists, best performing ETFs, best performing stocks, just for some ideas on things that have been performing well. And I keep this list in here 4 times like this. If you're interested in the longer term trades, we have the buy the dip stock list. I'll have to update that one. But they generally don't change too much. The buy and hold stock list and the best long-term dividend stocks. So when the market's dropping, this is the time to start stocking those trades that you like, and then when conditions turn favorable, that's a potential opportunity to enter into those longer-term investments. So I like keeping that on there, just for, we can use these dips to our advantage. And the indices are correcting, so let's get to that. So everything in a correction right now. NASDAQ, pretty sharp decline. The NYSE composite had been doing okay, pretty sharp decline the last few days. The Russell 2000, very sharp decline. Canada, very sharp decline. We'll get to Bitcoin in a minute. So you can see we have exceeded the prior drop. We're at about 6.5% off the high on the S&P 500. 5.9% was the last drop before it started to recover. So we're not in, a crazy drop or anything like that, but it is noteworthy. Everything in correction at the moment. Oh yeah, Bitcoin. So we're still stuck in this range we've been talking about. We had the nice false breakout at the bottom. I like that. We tried to go higher, but we couldn't get much steam, and we ended up creating a higher low before, a lower high before starting to sell off again. So if we drew, you could draw a line from this high above this high to this high. We can see we're dropping from this low to this low, even these lows. So we can start to see this like descending channel forming, and yeah, it's just something to be aware of. If you're really long term, maybe it doesn't matter to you, but don't really love this price action. I'd prefer to see it stabilize and start moving up before adding to positions. And if currently long, I'm cutting exposure just because it's just not quite acting how I would like it to act. It did here. Nice strong run. We had the pullback, a little bit deeper pullback here, and then when it tried to go again, couldn't clear that prior high. So once it's given back this low again, this is called a double pump pattern. You have a nice strong move up, pull back, retest the high, comes back. It should be able to hold near that swing low, and if it doesn't, I like to get out. So cutting exposure there on Bitcoin, which I had got back in when it had this false breakout. So not horrible, but it's just not quite acting how I would like. But I still think it's good longer term, but that's more of just an opinion. We can only trade based on what the thing's actually doing, and right now it's not showing anything I super like. Let's look at the health indicators. So this looks extremely messy. I'm sorry for that, but I wanted to show a few things. We can start to see, I'll draw our attention first to this indicator here. So this is just the rate of change per day So just how much the S&P 500 is moving up or down as a percent per day. And you can see during bull market behavior, it stays within the bands, and the upper one doesn't really matter. It's more this minus 2%. You just don't really see big declines in nice bull markets. It's pretty tame. If we look over here to 2022, and this is why it's so cluttered, because we're looking at multiple years on a daily chart here, it starts to get quite mucky early on. So this was kind of the top, and then 2002 started and we started declining, and yeah, you can see even just before that rally we started to get these 2% drops, and then they kind of continued here, and then it just kept escalating, and they stuck around, and we just saw more and more of them. And then once 2023 came along, we had a little bit as we were coming out of the lows, but then we had basically more than a year of silence on the minus 2% drops. Then we had one recently, I believe it was July 24th. When we go back to the article, we'll see it. Where is it? Yeah, July 24th. And then we weren't quite at a 2% down day on Friday, but it was pretty close, like 1.8 something percent. So we can start to see like these bigger drops. And even during this decline, we talked about it when this was going on in the videos, how even though the price action was pulling back, there was no strong selling coming in. So we talked about how it could more likely just be a pullback. It ended up being a little bit bigger one, about 11%, and in total. But it seemed like just a pullback within an overall bull market. This is exhibiting more bearish market conditions, kind of like what happened in 2022. So that doesn't mean a bear market will develop. I'm not into predicting things. We're just talking about what's there right now and how that's going to influence my trading decisions. So it does look that there's some bearish type conditions. So that just means, well, I'm going to back off on longs and see what happens, right? Wait it out. So that's a little bit concerning. There are some other indicators which are holding up okay. The NYSE advanced decline line still in kind of an uptrend here, but you can see it's kind of losing its momentum and probably going to potentially break lower. Again, we don't need to predict it. If it happens, we already know that we should be very cautious on the long side based on these other indicators. This one tells us nothing at the moment. It's upside volume versus total volume. And if we start to see extreme readings down here, that would mean only 10% of the volume that occurred in stocks were moving to the upside. So that means on the flip side, that'd be 90% downside volume. That is a bearish signal. We tend to get those in bear markets. So right now we haven't got any of those really strong bullish readings or those strong bearish readings, so it's just a neutral. This one is mixed. This is how many stocks are above their 50-day moving average on both the S&P 500, which is red, and all U.S. stocks, which is the bluish turquoise. And 49% of all U.S. stocks are below their 50-day moving average. The S&P 500, there's about 56% of stocks in the S&P 500 are above their 50-day moving average. So it is, yeah, just, again, not ideal. If there's capital exposure taking place, it should be minimal because we have some conflicting things going on. It's not a time to be super short. It's not a time to be super long, at least for how I trade. And yeah, so that's concerning. So we talked about all this. You can always judge some trading by how are your trades going. If you're getting chopped up, the indicators are telling you that's probably going to happen. So may as well, back off a little bit. If you've been picking some winners and you're doing well, you always want to trade based on your self-feedback, where, you know, if you're doing well and conditions are still good for your strategy, then you would have continued to trade it. But if conditions are not good for your strategy, that's you know, why I do this, because I tend to find that I do the best when the indices are trending, most stocks are trending, I'm seeing lots of setups, and right now that's just not happening. So sectors on the move. Utilities strongest, and you can see utilities here near the top on all 3 time frames. This was actually discussed in the May 11th video. It was concerning to me that all the way back then that utilities were so strong. Utilities are a late bull market strong sector, and so that was generally. So yeah, it was just interesting that while the market was kind of booming, that we were having utilities as really strong. It was a bit concerning. So that's, you know, still the case. And just because I don't address something every week doesn't mean it's totally done with. But yeah, utilities were strong. They're a defensive type sector. So very interesting that, you know, of course now they're still performing well or better than everything else, because money tends to rotate into them near peaks. The next thing I think we should address, so yeah, there's nothing really strong. Real estate's kind of up here on all 3 time frames, and healthcare also kind of up in the upper half of all these 3 time frames. But let's also, whenever the market starts to decline, I start to see, you know, a lot of, you know, the 50% decline is coming, and just is that likely to be the case? I have no idea. But we can look at history to get some ideas of how common certain types of declines are. So if we pull up a chart here, you can see 15% declines almost occur too often to even count. There's just, you know, tons. They occur, yeah, probably on average every couple years or so. And, you know, 20% declines, a little bit less. You know, the chart looks a little bit less cluttered. But when you start getting into 25, 30% declines, they are rare. Since the 1950s, we've had 6 30% declines or greater on the S&P 500. Quite rare. You see a lot of people talk about 50% declines. We've had 2 of them since 1940. So just be aware that, you know, I'm not saying a 50% decline can't occur. It's just exceedingly rare, and that generally, once markets are correcting, I am looking for opportunities to buy good stocks, strong stocks, take advantage of the market. So I wouldn't listen to all the doom and gloom. I've posted that you never want to listen to someone who's always optimistic, because you are going to miss your exits, and you never want to listen to someone who is always pessimistic, because you will end up missing your entries. So you want to take kind of a neutral stance where it's, yeah, there have been bigger declines, there have been smaller declines, and just take a broader view to it, where we are putting money on the line, we are taking risks. That is what the market is about, and yeah, it's going to do what it's going to do. But thinking that the market's going to crash, or that we're only going to get a 5% decline or 6% decline in this case, and then it's going to bounce right away, I don't think either of those are fruitful. It's, you wait for your setups, you wait for the conditions that tend to work for your strategy, and if we do that, then we'll be in when the market's going up, and we'll be out when the market's going down, and that's really all you can do. There's no point really predicting if this is going to be a 30% crash or a 20% crash or a 40% crash. It doesn't matter, because you're going to sit on the sidelines if you're just a long only trader until conditions improve. If you're a short trader and conditions are bad enough for you to take shorts, you take shorts while that's the case, and then once conditions turn favorable, you enter long. So the predicting how far this decline is going to go, I think, is rather fruitless. But if you want some ideas of how kind of rare things are, you can check out this article, A History of Stock Market Percentage Declines. You can see it currently on the front page there of the website, but as new articles get updated, it might move back a couple. But yeah, History of Stock Market Percentages Declines, just to give you an idea of how common things are in terms of declines. There's always some industries that are performing a little bit better than others. You can look into that. I will sometimes trade a individual sector if it's really strong, even if overall market conditions aren't great, because that sector is doing well. There might be some opportunities there, but you do want to realize that you are on borrowed time when doing that, because eventually, if the market does decline, industries generally go with it. Pretty much everything sells off. About usually 80% of stocks are correlated to the market indices. So not interested in longs here. I'm going to wait a bit. Some shorts are a possibility, but it's mixed conditions, so really minimal capital exposure for me. I still like Bitcoin bigger picture. If we were to look at the bigger chart, we do have a big uptrend going on, and we are in kind of more of a contraction, consolidation type phase, but ultimately it has to break higher. So a descending channel now in play. Not an ideal time for me to be involved, but I still have a little bit of exposure long. I also day trade stocks in the Euro USD. I like day trading because you can there's always something, right? It's not like swing trading where we have these periods of action and then inaction. While we don't take trades every day, day trading, because conditions might not be ideal, generally we have opportunities most days. So you can check out those. If you're more of just someone into passively investing, that means you don't want to really have to think about all this stuff with the market, then you can think about passively investing. That's just buying and holding ETFs, capturing what has been 10% average returns for the S&P 500 over the last 100 years. S&P 500 over the last 100 years, yeah, about 10.6% has been the average rate of return, or compounded rate of return, I should say. So yeah, that's another option if this just all seems too crazy for you and trying to stay out and trying to get back in. The returns can be higher if you get it right, but passive investing is another way to do it and just compound your wealth over the long term. So that's your swing trading stock market outlook for this week. It's definitely interesting conditions out there. We'll keep an eye on it, and have a good trading week out there.